Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the top small caps in play today. So first up is Jagwire Health here, ticker symbol JAGX. Huge move today, closed up 158%. Congrats everybody, this was a big play. It was alerted in our chat and after hours yesterday, so congrats to our members that alerted that. Thank you very much. It made a big follow through today, opened at 110. What happened was it ran up here above the 200-day simple moving average at 189, traded above up to 250 and pulled back. That drop below was a sell signal. So going forward, it's going to have to break above 189. Failed to break 189, and you could see that 100-day simple moving average at 138 tested. The red flag on the chart is the gap between high of day yesterday and low of day today. Check out that huge volume spike. So have to break above that 200-day simple moving average to head higher. Let's look at Camber Energy here, ticker symbol CEI. So yeah, it had a really nice move yesterday with that close above the 50 and 100-day simple moving averages here, above that gold line. And then today there was a big gap up open up here above 65, ran up near 75 and then pulled back. It formed the black candle. When this black candle forms, the safest thing to do is to head to the sidelines. This chart was made at the open today. As you can see, it never even hit the levels over here from June and July. And then when it dropped below this high close here, that was signaling downside risk. Right now what you're looking for is a gap fill, the gap between yesterday and today filling, and then a test of this 100-day simple moving average at 34. Look for a technical bounce off of 34. That level should hold. It'll signal downside risk if it breaks. If you look here at the CEI 15-minute chart, you can see the next support level is this 50 simple moving average at 40. If that breaks, look for a drop down to 38. That's the top of the gap here, or the bottom of the gap, the high of day from yesterday. And so a drop down to 38 would fill the gap. There's a gap between this space here. Drop to 38 would fill it. If it did drop below 38, you could see that 31 level tested. Okay, let's look at Blue Apron here, ticker symbol APRN. It closed up 9% today. Very very nice move. Had the nice volume spike. Call options did well today, and the chart is heating up. The big thing on this chart is going to be this middle Bollinger Band at 187. It's only going to be a good play if it closes above that level and turns it into support for the calls to keep returning good percentage gains. It closed above that level in August and it failed to hold and it pulled back, and so we're looking for a bullish change in trend, for a close above the middle Bollinger Band and then a run up to that 100-day simple moving average to retest that 225 resistance zone. Keep in mind the 50-day simple moving average is coming down. Yeah, so if it fails to break that 187 level, it will not be a good play to go long. As far as the 15-minute chart goes for Blue Apron, it's holding this 400 simple moving average at 181, and then the big level to hold is going to be this blue line. That's the 300 simple moving average at 179, basically 180. If it can stay above 180 tomorrow, it should push higher, and then this 190 resistance zone will be the level to break. Trading below 180 would signal downside risk. You could see it drop down here to 176. As long as the middle Bollinger Band and 50 simple moving average are holding down here at 171 and 172, this uptrend's intact on the 15-minute chart. It just, once the candles get above that 300 simple moving average, they have to stay above for the stock to remain bullish. Okay, let's look at WWR here. Closed up 17%. So congrats everybody that caught this play yesterday. So yeah, good follow through. It's in the bull zone on RSI there at 56 with room to run. You have Fasto up there below 80. It had a little pullback. You had the bullish crossover in ADX, and so it hit our target today. If you caught the last video, we were the big signal yesterday was the load on the break above that middle Bollinger Band at 21, and then it followed through today and it hit that 50-day simple moving average. As you can see here, it's been resistance during the pullback, and so it's going to need a close above 28 to head higher. If that level fails to break, it could come back down and test that 21 level. As long as the middle Bollinger Band holds, a new uptrend could begin, but it has to get above the green line. Once above the green line, we'll be shooting for a run up to that 100-day simple moving average at 36. Keep in mind there was an increasing volume pattern with a volume spike today, and it failed to break resistance. Many times this is a climax spike type of setup, so it's going to be really important that it can break 28 to keep pushing higher. Okay, let's look at Denison Mines here. The non-ferrous metals have been running, so keep an eye on that sector. Look up the different stocks that trade in the sector. There's several different ones. I posted some charts on it, and yeah, they're breaking out. As you can see here, DNN finally broke the top of this. It filled this jar. Okay, so it came down here, bottomed out at 45, and then it came back up to this 57 level, and today it broke out above the lid, the top of the jar here, and so that signals more upside potential. There is a gap between high of day yesterday and low of day today. What you really want to see basically is this 57 level. If it can stay above 57, that's going to signal it wants to keep pushing higher. If it drops below 57, it could start consolidating. If you look at DNN on the weekly chart here, it's making a nice move at 65 on RSI. It still has room. It ran up here above 70 in the past. It is frothy at 96 on Fasto. The key development this week and what caught my eye is this red line here. That's the 200-week moving average. If there's a weekly close above that level at 56, that should signal more upside potential. That's a major level to break. Right now, it's hitting the yearly high close on the weekly chart. That's the first week of trading in January. And so if it can close above that level, it's right around 61. That should signal that it wants to head higher. Then you have the 67 level, and then it could possibly work its way back up to 80. Where that 300-week moving average is and where the high close was from back in 2017. So right now we're looking at this 200-week moving average, and it would be extremely bullish if it turned into support. Okay, let's look at INPX. And to the other side, if it dropped below, that's going to signal consolidation. Nice move today, closed up 22%. Yeah, so this is heating up the chart. It's been turning the middle Bollinger Band and the 50-day simple moving average into support down here at 14 and 15. That level has to hold. That's the stop loss level. If it dropped below, that would be a sell signal. Now to the upside, it's been hitting this gold line. That's the 100-day simple moving average. Once the algorithmic trading programs finally let it close above, that should be the signal it wants to head higher. Fail to break that level, and that's going to signal more consolidation. 21 is the high close here. On the 12th, it's going to need to break 21 and 22, and that will signal more upside potential. Okay, let's look at NSPR. Closed up 48% today. Nice move. I made the chart. Yeah, this is still in the bull zone here at 66. Fasto did push all the way up to 97. The bull cross here signaled more upside potential on ADX. So this had been in a sideways channel for an extended period of time. You could see over here where it just started channeling out, and then it dropped a little bit lower, and then it got back up in the channel. And then so what happened today, the big development was the break above the top of the channels. So it broke above this tight, smaller channel here, and then it broke above the bigger channel here from back in July and August. And so the close above both levels and above high close resistance and above this green line, which is the 50-day simple moving average at 21, closing above all these levels is signaling more upside potential. Okay, so the key now is to stay above 25. If it dropped below 25, that's going to signal more consolidation. Now, that's the good part. Now the historic trend here is that this could possibly pull back with this setup. If you look right here with these three candles, you could see you had 3 green volume bars in a row leading up to a big climax spike, and then the close here on this candle was above the upper Bollinger Band. That led to the candles working back into the bands, and so if that pattern repeats here, we've got 3 candles in a row heading up, 3 green volume bars with the big climax spike, and then the close above the upper Bollinger Band. If history repeats, this is going to work back into the bands and retest that middle Bollinger Band and that 21 level. Now what we're looking for is a bullish change in trend, and 25 holding and it pushing back up here into the 40s, because that's where it would be heading if it can stay above 25. So keep an eye on that level. It's just crucial that it stays above 25 tomorrow. But this has a climax spike kind of look to it, just because of the way the stock has a history of trading. It disappoints a lot, but yeah, this could be the one. Tomorrow could be the day where it breaks that trend and it breaks out higher, so you just have to be on your game if you're trading it. Okay, let's look at CGIX. Closed down 2% today in regular trading, but it had after hours news, and in after hours trading, it did close up at 129. It traded much higher than that. It was above 133 in after hours trading and dropped back below. This is the only level that matters in my opinion tomorrow. The 200-day simple moving average at 133. It's going to be real simple. Trading above that level signals upside potential. Keep riding. You've got this gap over here that ended up filling with this upper wick, and so you have the top of the gap, which is right here at 160, and so that's always a tough level to break when you have a top of a gap. But if it can get above 133, then you have 160 and then 191. Those are the big levels above. And now if it breaks above that 200-day simple moving average intraday, and then it drops back below, that will signal downside risk, especially if there's a gap up open and there's an unfilled gap on the chart. There is another gap right here. The news was good. We'll just have to see if it's enough to keep it above that 200-day simple moving average. Okay, let's look at GNCA. Closed up 17.5% here. Nice close above the 50-day simple moving average after closing yesterday above that middle Bollinger Band at 57. So this was signaling more upside potential. It had been disappointing since the over here it was trading above the dotted purple line, and then when it dropped below, that's when this nasty downtrend started. Well, on a couple of occasions in August, it tried to get above that middle Bollinger Band and get an uptrend started, but it failed. And then now in September, it's above that level and it's holding, and then that was signaling more upside potential. Notice that there was the volume spike yesterday. That was the largest volume day since way back here in June. So that was another signal that the chart was heating up, and you had the bull flip on PSAR. And so all it had to do was break above this 50-day simple moving average. It had broken intraday. There was a huge gap up open today. So the bulls were rewarded that loaded yesterday. Well, now the next key level to break is going to be this 100-day simple moving average. It's going to have to get above 77 to head higher. If it fails to do so, it could come back down to that 50-day simple moving average and test that 62 level. As long as that 50-day simple moving average holds, this new uptrend should continue. Okay, let's look at MTNB. Closed up nearly 19% today. So this is another one that's pushing. We've got a lot of small caps that are pushing like this. That big volume spike yesterday, and then the close above that 100-day simple moving average at 46, the gold line. Notice how all these candles were trying to turn that level into support. Yesterday's close on the big volume spike, that was your big signal. Okay, there's more upside potential. And then today it did close above the red line. That's the 200-day simple moving average. It's the line in the sand for this stock. If it can stay above that level, it signals upside potential, and then you're looking for a run up to this 300-day simple moving average at 91. Always a tough level to break when tested on the daily chart. Now, if it drops below 73.5, that's going to be a red flag. Notice today's candle is floating above the upper Bollinger Band. Many times when that pattern forms, the candles do work back into the bands. If that happens, you want to see EMA4 at 60 support hold. Okay, let's look at DRYS. So we've got the marine transportation sector is in play right now. I'm not sure if you knew that, but yeah, there's stocks in the sector that are moving. DRYS is one of the most well-known ones. It closed up 8% today. RSI is back above 70. When it really got pushing on this last big run, look at this run here, RSI got above 70 and stayed above that level. Today's the first day above, so this could be the start of a push higher. Now, if it dropped below 70, that would be a sell signal, so keep that in mind. It has a nice uptrend going, all right? It's riding EMA4 support higher. As long as EMA4 at 548 holds, this uptrend should continue. Once it closes below, that'll be a bearish change in trend, and it could come down here and test that $5, $4.95 to $5 support zone in that 50-day simple moving average and middle Bollinger Band. Notice how it had turned the gold line into support. That's the 100-day simple moving average. It's filling the jar. Back to this closing price back here on the 25th of June. That's going to be the big level to break up in the 650 resistance zone. So it's working back to 650. Once it hits that level, if it does, it's going to need to close above and turn it into support to head higher. To get there, it's going to have to get above 610, which was the high close in July. That's the next big level to break. Okay, so DRYS is running. Check out Tops. Closed up 6% today. Yeah, a lot of people talking about this one in the chat. So yeah, check it out. It's above the 100-day simple moving average at 107. It has to hold that level. Right now, that's the stop loss level. If it were to drop below that, that would be a sell signal. It needs to break above this 119 level. 118 to 120. You've got this high close from back here in June, and it's been struggling with 119. If it can finally break through, there's some upside potential because there's a gap over here between low of day on this candle and high of day on this candle. You can see this upper wick did not fill the gap, so a run up to 150 would be a gap fill. So that's the bullish implications. If tomorrow it breaks above 120, look for a run up to 150. It gets to 150, it's likely to come up here and hit that 200-day simple moving average at 158. Okay, so take a look at DCIX. This is Diana Container Ships, another marine transportation stock, closed up 15% today. Check out how RSI is above 50. It's back in the bull zone. So it has room to run. It just has to, now it has to stay above 50. If it dropped below 50, that would be a sell signal. Keep an eye on ADX here. If that green line crosses over the black line, that should be a signal the bulls are taking control. Right now, it's working on this middle Bollinger Band currently at 116. That's the stop loss level. It has to hold that level to keep this uptrend going. If it were to drop below, that would signal downside risk. Okay, so right now, it hit that 50-day simple moving average, the green line, broke it intraday and pulled back. It has to close above above that level. Once it turns it into support, you have the 100-day simple moving average just above at 149. When both those levels turn into support, that's when DCIX could really get moving. So, this has a history of making some good runs. It also has a history of lots of head fakes, okay? So the name of the game with these marine transportation stocks is don't get caught holding the bag. As soon as it turns sour, as soon as you get the, I want to show you this volume spike down here. So notice there was a big volume spike today. So that many times volume will precede price. So we'll see if they can give it another run. As soon as you have a big push and then you see that red candle form, that signals the party's over usually, and especially if it drops below that middle Bollinger Band. So yeah, I just want people to be careful, since I'm posting these marine transportation stocks, is that there's always losers on these things, and you just don't want to be a loser. Okay, so these are trading vehicles. These are not long-term investments. Okay, you trade them when the ATM is open, and you get out as soon as they start giving you trouble. Okay, here's you're locked in gains. Here's GLBS here. This will be the last one, closed up 19%, and yeah, so it's heating up. You notice you've got RSI and Fasto both in the bull zone. The bull zone for RSI is between 50 and 70. Above 70 is overbought. For Fasto, it's between 50 and 80. Above 80 is overbought. That becomes the power zone. Okay, so basically for this stock, it's been working on this 50-day simple moving average for quite some time, since back here in August when it broke above intraday, and then it's finally turning into support. So right now, if they can stay above that 40-cent level, 41 level, that's going to signal upside potential. It's hitting the 100-day simple moving average basically at 54. If it can close above, that should signal that it wants to push higher. So keep an eye on it for a break above 54. If that happens, it could run back up into the 80s and test this 200 and 300-day simple moving average. Once again, notice the volume spike. There was a big volume spike today. So many times with these transportation stocks, there's volume before the run, but also, you get the head fake like right here where they had the volume spike and then that was it and it pulled back. So yeah, you have to be really careful. The key is to follow the intraday charts, watch that 15-minute chart closely, and when that middle Bollinger Band breaks, it's time to get out of Dodge. All right, thanks for doing this video. Come check out the chat. Thanks.